The currency space where the Indian rupee settles higher today after a volatile trading session ending the day at 53.67. A stronger euro and foreign fund related selling supported the Indian unit. The RBI's move to ease the exporters' access to forex market also lent support. The rupee has been a direct beneficiary of FII's inflows, which totaled nearly $3 billion for the month of Jan. Let's get in then. Ashutosh Khajuria, he's Head Treasury, Federal Bank, and he joins us for the currency leg of the segment as well. Mr. Khajuria, hi, welcome. How are you looking at the Indian rupee appreciation? We have been making higher highs almost on a daily basis. How would you read the appreciation?
Actually, as you rightly said earlier, that's basically a lot of money flowing into the capital markets. That $3 billion which you have talked about, in the first 3 weeks of this month, of this calendar year itself is an indication that it's all led by the capital flows. See, our trade deficit is in a bad shape. I would say more than 10% of GDP is what our trade deficit is, and that would always put pressure on rupee. And this part, the current account deficit, after taking care of invisibles and all, still there is a huge gap to be bridged to the extent of something like, the last quarter numbers were 5% of GDP, which is all-time high. So I think looking into it, rupee, I think would always remain under pressure, but for these feeds of capital inflows, whether in the form of FDI, whether it's, investment in Indian entities like, Reliance getting it from BP, or the ADHE group, you have the infusion by Nippon, and all sorts of, FDI clubbed with FII would take care of this current account deficit. But, sustaining it for long, it would be difficult. So I would see that this is a pleasant move, of course, towards 53, but I don't see rupee appreciating much from here because we always would have trade deficit haunting and taking it towards 55.
Well, absolutely, Mr. Khajuria. As you pointed out, the government is pushing a lot of reforms on most of those sides. But ahead of the policy meeting, what are you factoring in sense of an interest rate cut?
See, I think the positive thing recently on currency front was, imposing, rather increasing duty on gold. Because gold last year took away $58 billion of our kitty. So I think any curb on gold imports would be positive for rupees, appreciation, and definitely, all sorts of reforms that are coming in would bring in more of capital flows. So together with, expectation of capital flows, because market works on expectation more than the actual flows and all. So I think the expectation of flows plus stability in policies, because time and again, President FM is repeating, what all, he has been saying, he's sticking to it, and no extra market borrowing, getting, fiscal deficit to 5.3% of GDP. All these statements are followed by more and more of action and, move towards reforms and all. And this is a very positive sign, and I think for any overseas investor also, he would like some continuity in the policies. Like for next 3 years or so, you don't have GAR haunting you and all. So these are some of the actions which are getting reflected in the, the currency pair, the external value of domestic currency, which has gradually appreciated from 55 odd to 53, 60, 53, 63 or so.
Well, absolutely.
So I think, yeah.
In last 7 days, we have seen nearly 2% of gains coming in. Getting you in the conversation, Vijay, as well. What's your sense on charts now? How much of further gains are you expecting?
Manisha, yesterday I talked about 53.20. I would stick to that in the futures segment, and today we've seen a close at 53.64. So I think 3/4% of appreciation is still there before one could see a correction in the USD INR upwards. So if I do get USD INR in the January futures series at 53.20, I would like to take a call and buy some lots here for a bounce up to maybe 53.75, 53.80 at max.
Mr. Khajuria, a final question to you. What's your expectation on Jan 29th from the monetary policy?
I expect 25 basis points cut on the repo rate side, the policy signaling side. And
All right.
I think I am expecting more curbs on gold imports, because I think government and RBI both are very serious about too much of gold getting imported into India and a lot of precious foreign currency being wasted on it.
All right. So not just statements,
think,
but action.
Yeah.
So not just statements, but action further coming in from RBI and government.
Action would be, I think, more. Yeah, I'm expecting introduction of some financial instruments that can give you the same return what you get on holding of gold and all. I mean, making it easier, making it, easier for the investors to get what all appreciation they expect by holding the physical gold.